This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, let's take a look at the gold market. On the gold market we have got the pattern that we have discussed on Friday, that is the bearish stop grabber pattern. So you can see that market on Friday is trying to move above the MACD predictor indicator. Other words, market has tried to shift trend to the bullish side but has failed and closed below it. That is, other words, the failure of the trend shifting, and usually this pattern has the target right at the previous lows, somewhere in this area, because people who entered long with the trend shifting on the daily time frame, where they place their stops, somewhere below the swing low. Well, when the market fails with the putting trend on the bullish side, these traders appears to be trapped on the wrong side, and that's the nature of this pattern, and market usually continue move down and taking out of these lows. Well, honestly speaking, these lows also are acceptable for as the target stop grabber, and strictly if we will take a look at the situation from the book point of view, and with the strict approach to this pattern, then the target of this pattern, most recent lows, this one. But following the nature of the gold market, it's very difficult to imagine that when the market will take out of these lows, it will leave behind these lows and that lows. Very probable that market will continue move lower and wash and rinse that lows and grab the stops right below it. When we will see how it will happen and by what pattern this could happen, you will understand that indeed market could continue move lower. Well, invalidation point of this bearish setup for the stop grabber is particularly the high of this pattern, but for the overall bearish context is these highs, because here we could see some kind of, if you will draw this trend line, you will see that is some sort of the bearish flag that is developing. And if market will take out and shows the breakout of this flag and take out of this high, then probably this will be the challenge for the upward action right inside of this consolidation, and at minimum to the previous highs around 1480 area. It's right here. That is also could put the foundation for the starting of the double bottom pattern that we have discussed, and now this pattern is still possible, even if market will wash out these lows and create the new lows, especially if it will be in the manner of the wash and rinse, so just fast move down, grabbing the stops below this low, fast return right up. Well, in this case that will be absolutely typical for the double bottom pattern, and that will give us the confirmation that probably this pattern will start to work. That is the major point that we will watch for in the beginning of in the end of this week probably, depending on when market will reach this area, if it will reach it at all. So in fact, on the daily time frame we do not have any other patterns. So just some hint on the potential bearish flag and the formed pattern that was confirmed, bearish stop grabber. Since this pattern gives us significant advantage, because the invalidation point of this pattern stands very close, as well as this high, although it's a bit extended, but in general this is rather close, and this makes short entry attractive. And the second reason that is also important, because in fact we do not have any bullish patterns. I do not see anything right now that could let us to enter long from these areas. To speak about the long position, we probably should wait either take out of these highs and upward continuation, or grabbing the stops below these lows and some return right back, some bullish engulfing right at these lows. That shows that will be just a stop grabbing and returns right back. So that two possible setups for speaking about bullish sentiment. Until this will happen, well, I see only the bearish possibility for trading. On the 4-hour time frame, we see the same picture as on the euro currency. In fact, this is the potential for the bearish butterfly, for the butterfly buy pattern. I call it as bearish because it assumes the downward move. Well, the target of this pattern, minor target, stands around 1317, but since this target stands below the lows on the daily time frame, probably market will get some acceleration by the stop hitting that will add acceleration to the downward action. And if we would like to make the deal, make the focus on this butterfly, we should also be ready that market probably will reach 1290 area. It's right here. Probably we should be ready for 1618 extension of that butterfly. Well, on the hourly time frame, in fact, I do not see much to comment. We see the trend has shifted to the bearish side. That is our potential flag. That is a validation point for the bearish development. Probably you could think about this head and shoulders pattern that although we have called it like that, but it's not quite the head and shoulders. Precisely speaking, this looks like head and shoulders by the shape of this development, but in nature this is not this pattern, because head and shoulders should be confirmed and be found on the market mechanics that assumes the reversal at some top, and the appearing of these tops of the head and shoulders has the strong explanation from the market mechanic point of view. That's why head and shoulders pattern mostly appears on tops, significant tops. But here you can see this price action appears somewhere in the middle of the price action, so not quite common for the head and shoulders. But maybe this pattern work. I do not know, because it has nice shape in general. This is 127 with that swing. That is very harmonic retracement. We have discussed it in our weekly daily researches. That's the 618 resistance of that swing. So in fact, the shape is not as bad as it could be right here. But there are two major levels to watch for in the beginning of the week. First of all, it's weekly pivot point. We need that market will continue to move below it and give us the foundation for bearish sentiment in the short-term perspective. And the major level to watch for is this support line. As market starts to break this level down, that will make the reaching these lows, and in general the working of this butterfly will be more probable. That's two levels to watch for. That's very significant. And that's the validation point. So somewhere in the beginning of the week, if you would like to take the short position, you probably could do it right from this area, somewhere from this top of the right shoulder of this pattern, if we could call it in this way. The one thing that a bit worries me is maybe this potential splash up. So could we have the butterfly to the upside and then turn to the downside? That's also possible. But if we'll take a look at the overall action and on the euro currency, the chances of this move to the upside is not very significant, because in fact this move up was right here. On euro currency it has reached this level, but on gold it was a bit more shallow. That's why I do not see significant odds that this splash to the upside should happen. Probably market should turn to the downside somewhere from this area. So if market will exceed these highs, then overall bearish context will be destroyed. Until that will happen, we could count on the move to the previous low 1320 at minimum, but more probable target is 1290, I suppose. Mostly due to the market mechanics that a lot of different stop orders have been placed right below the previous lows on the daily time frame.